What's going on, guys? Welcome back to another exposing Citadel video. We're going to go over the nasty truth behind Citadel, as well as look at Citadel's short position in AMC, which they are down about $500 million in, which does make you think they're manipulating the order flows like they have got fined for in the past for doing. So we're going to talk about a lot in this video. I don't want to waste any time getting into it. Make sure to hit that like button and subscribe to the channel for more videos like this, as well as link down below in the description. There is a link for Public. They do not route your order flows to companies like Citadel. The only other brokerages that do not do this, obviously, Public, Fidelity, and Merrill Lynch. So if you guys are not signed up with that, no need to even link a bank account or deposit a single dollar. Now that that's out the way, let's start off by getting into a little bit about Citadel and Ken Griffin and just how secretive their trading algorithms are. And this article says how Ken Griffin's Citadel transformed financial markets. It does go on to say hedge fund boss Ken Griffin is more than a little paranoid. He's been panned by reporters for the barrage of security checks needed to get to Citadel's trading floor in his Chicago office, and lampooned for the hyper-stringent non-disclosure agreements he requires of exiting employees. He is loath to talk to the press and fiercely protective of his personal life. Living in the shadows has been time well spent. Over the past 4 decades, he has quietly but methodically built a financial powerhouse intended to rival the likes of Goldman Sachs and Morgan Stanley, with grand ambitions to transform American financial landscape with a relentless technical edge. But Ken Griffin's business ventures went too big to fly under the radar. Now, behind the sparkly quant hedge fund that launched his Wall Street career stands his inconspicuously profitable trading operation, Citadel Securities. The firm is largely responsible for the rise of online brokerages and frenetic trading apps like Robinhood, whose pandemic stock trading boom culminated in a Reddit-fueled short squeeze that rocked financial markets and stirred up a torrent of investor anger, fear, and conspiracy theories. Now, that is a little bit about how secretive it is. To even leave the company, you have to sign a ton of disclosures saying you will not give away the secrets of Citadel. That is why basically you can't find any information about Citadel. It's very, very hard, and you have to do a lot of research like I'm going to provide in this video to even get any answers to anything involved with Citadel or Ken Griffin. But let's talk about more about high frequency trading and how these algorithms do work. So these algorithms read real-time high-speed data feeds, detect trading signals, identify appropriate price levels, and then place trade orders once they identify a suitable opportunity. They can also detect arbitrage opportunities and can place trades based on trend following news events and even speculation. To put Citadel's trading algorithm into a perspective here, on January 27th, Citadel executed 7.4 billion shares on behalf of retail investors, Griffin said at the GameStop hearing, or more than the entire average daily volume of the entire U.S. equities market in 2019. We are talking huge numbers. If they're executing these trades, even doing a tenth of a penny difference, one, they're making a lot of money, but can have a huge impact on the stock price, whether that's to the upside or the downside. And when you do take a look at Citadel's short position in AMC, you can see why they have a huge incentive to bring AMC's share price down. Now, we will take a look at Citadel's exact short position on AMC, but to put this into more perspective, 70 to 80% of all stock trading is done by algorithmic trading. And as you guys seen, about 70% of retail trading is handled by Citadel Securities. So they have a huge influence on what actually happens to the stock. Like I said, whether that's to the upside or the potential downside. But now let's take a look at some of the fraud and some of the high amount of payments they have had to pay out to other governments, FINRA, and the overall U.S. government for misleading investors, and what specifically happened with a lot of these situations. So this says Citadel Securities was fined $700,000 by FINRA in July 2020 for trading ahead of customer orders. They delayed certain equity orders from clients to buy or sell shares while continuing to trade the same stocks in its own account as part of its market making activities, according to FINRA. So they wouldn't let you, or they wouldn't execute your orders, but they were trading the same stocks in their accounts. So they were fined $700,000 for this. They were also fined $22.6 million for misleading customers about the way it price trades, the U.S. Securities and Exchange Commission said on Friday. The SEC found between 2007 and 2010, Citadel used two algorithms to execute stock trades on customers' behalf, gave investors a worse price for their trades, even when Citadel knew better prices existed elsewhere. The SEC penalized Citadel for failing to disclose the use of those algorithms to clients. And what do you think happens exactly today? We know they use algorithms, but we don't know anything about these algorithms because they are so secretive. But take a look at the biggest fine they have ever received. Citadel Securities LLC agreed to pay 670 million wons, $97 million settlement for alleged trading irregularities during the 2015 market rout in China. The settlement was announced by the Chinese Securities Regulation Commission in a statement on its website. And you could dive even deeper into this, but it's basically the same thing, how they misled investors about pricing and using the algorithms for their own gain. And this was a 5-year probe by China Securities Regulation Commission. So we have huge fraud that has been documented many times. And then it says, in addition to Citadel Securities and 4 domestic investment firms, 3 local brokerages that facilitated the trades for Citadel Securities were fined an additional 416 million wons or 60 million for margin financing violations and short selling. The CSRC later cleared the brokerages but issued fines totaling 15.2 million wons, 2.1 million on 4 domestic firms involved in the probe. So the domestic firms didn't get it as bad, but Citadel got the hammer. They got whacked for this because they were behind everything that happens. And you guys can check this out just for yourself. Literally type in Citadel fined $97 million and this will come up. That is almost 1/10 of $1 billion. That is a big amount, but relative to how much Citadel is actually worth today, it is not a big amount. But Citadel, back when this happened in 2015, 2016, they were only at about $30 billion under management. Today, that number is much different. And now we're going to take a look at Citadel's actual position size. Portfolio value of $407,634,321,000. And now let's take a look at their actual short position on AMC. And we can see they shorted shares at $6.16, shorted 5,676,200 shares, and that was for about $58 million. Now, AMC stock is almost 10x that price, right? $60 would be 10x. They would be down 1,000%. Now, AMC is about $54 per share right now, so they're down about 950% on their short positions. And this is, relatively small and not something to worry about. Being down 500 million on a position isn't too much relative to their portfolio value. It's like 1 out of 800 if you want to put it into that perspective. So it's a very small actual portion of their portfolio, percentage of their portfolio. But once AMC does squeeze and they really see billions and billions of dollars in losses, that is where this is going to add up to a significant amount of money. So that is their short position, and I do think they have a huge incentive here to be basically not executing trades at the best price, but also putting in their own numbers for these trades because they have the power to do this, and only 15 of their 3,000 employees actually have access to the direct trading algorithms. And this is so secretive, it's hard to find information about this, but from everything we could tell, they are being fined multiple times a year for millions of dollars at a time. That one with China was the biggest at $97 million. Huge numbers, guys. We are seeing misleading investors and fraud throughout these articles everywhere. So the key here, guys, the only thing that Ken Griffin and Citadel cannot do is force us to sell. They can't force us to sell. They can have a determination on what you get filled at, right? They have the behind the scenes insight into that, and they have the ultimate power, but they don't have the power as to when we sell. That is why I am holding all 300 of my shares strong, and we are riding this all the way till the end until we do squeeze. So with that being said, that's going to wrap up this video. This was a relatively short video just because it is really hard to get information about Citadel and specifically their trading algorithms, but we did cover a lot in this video. So with that being said, make sure to hit that like button and subscribe to the channel, as well as check out the link down below for public and Webull. Deposit $100 $10, get up to 4 free stocks worth all the way up to $2,400 a piece. They do give out great stocks, and you can also turn off this ability to lend out shares when you're actually holding them, so people can't short your shares that you're holding. So that is why I do have that link down below as well as check out the link down below for the buy and sell alerts. They literally pay for themselves, and we have been hitting monstrous trades. Join a great community that sources information all day long. With that being said, I will see you guys later. Enjoy the rest of your weekend. You guys sure deserve it, but I'll see you guys later.